Ladies and gentlemen, we are back again with Eddy from Haven. Yesterday, we learned what on earth is happening, okay? And at least I'm no longer mong cha cha about what's happening in the integrated shield plan. So today, Eddy, we're going to cover a lot more interesting things that you're going to share, especially on who and who should not touch on all this, okay? So let's go on with the video. Now I can understand the difference. My question is this. Why
Mm,
does the government introduce this plan? Because the consumer end up paying more in a catastrophic hospitalization event, right? So,
mm.
so isn't that bad for the consumer?
I think the insurance the main purpose of insurance is basically to cover the very catastrophic bill sizes, okay, such that if there's a very serious illness, the insurance help you to pay for most of it. All right. So I think right now with all the changes, it is designed to do that. Okay. It's just that in the past we have very generous IP plans whereby everything get covered. It's like buffet syndrome. And therefore people always think,
Got
people get to think that, well, it should cover everything. But covering everything is expensive. And therefore the recent change is trying to strike a good balance between benefits and costs.
Okay, so what you're saying is that because in the past, the riders are allowed to cover everything, people over consume, right? So
Mm,
people just take the highest plan possible. Anyway, it's paid by insurance already, so
mm,
they just whack everything, and
mm,
over time, this caused the entire healthcare cost to go up. Then, as a
mm,
result, you get your what 17% a year increase and things like that. So when the government control this overconsumption, it will then put a check to this. They call it a moral hazard problem. I think
mm.
in economic school they call it moral hazard problem, and as a result, this will stop the inflation from rising so fast.
Right. Yeah. And also, the key reason I think is this. I mean, my observation is that a lot of these bills right now is the small ticket items. Uh, because the rider really have to cover the small ticket items. But because a lot of these claims right now are the small ticket items, and therefore the loss ratio on this, therefore this IP rider absorb a lot of cost because of small ticket items. If most of the bills out there are the big ticket items, then the IP rider may not have the pressure to experience so much losses.
So the question really is there an option for people not to buy the IP riders at all? You know, I mean, IP you cannot sell, but IP riders,
Mm,
given now it's so expensive, might as well don't buy, right? So,
mm,
because first of all, you buy already, it doesn't cover to full,
mm,
and the chance of you needing it may be not so high. Okay,
mm,
so and I understand right now the IP costs, IP rider costs have also come down. So
mm.
how does the math work out? Is it worth it or not worth it right now? You know, from your professional point of view, to have IP rider.
Okay, IP rider does help to control your out-of-pocket expenses, your payment, your cash payment. All right. So by reducing the co-payment, it does help a bit, number one. But second, but also the rider helps to do this one thing. It helps to cap your co-payment. All right. Without the rider, there's no capping. There's no capping. There's no capping of the $6,000 for the new rider. All right. So imagine if, let's say, very touch wood, the bill is so huge at $300,000. Okay. That 5 or 10% of that $300,000 is a lot of money. Okay. So the rider also have to cap your co-payment to $6,000. So that's number one. The rider also have additional benefits, which it includes cancer benefits. Right now, it has the cancer benefits. All right. So why is this cancer benefit important? The base plan of your IP actually has cancer benefits, but there's a limit to it. So this when you buy this rider, it actually increases the cancer benefits. The when I talk about cancer benefits, basically there are two areas. Firstly, it increases the cancer benefits if if a person is seeking cancer drugs in the cancer drug list. Okay, so the government has actually a list of approved cancer treatment. Okay, if you use the drugs for this drug list, yes, the rider give additional benefits. So cancer treatment can be very expensive. So this extra benefit from rider does help to cushion the cancer bills. Second thing is this: the IP based plan, it doesn't cover cancer treatment outside the cancer drug list. Okay, outside cancer drug list. Uh, some doctors prescribe such drugs outside cancer drug list when the traditional form of cancer treatment is not successful. All right. So by definition, cancer drugs outside cancer drug list, they are quite expensive, number one. And secondly, they may not have the clinical good outcome. Okay. But people when they are at critical stages, right? They just want to try everything. All
Exactly.
right. So the rider does give you the extra benefits.
I see. Okay, so rider is not just simply just cover out-of-pocket costs in
Mm,
hospitalization. There are real benefits of riders. Okay,
yeah.
at least I can see that big plus. Okay,
Mm.
so bottom line is, who do you think will be hit by these new rules? Like what segment will be hit by these new rules, and who will benefit?
I think the person the group that benefit the most would be those who are older lah. Okay, because of the IP riders premiums are very expensive. People are complaining lah. Okay, about they're thinking of downgrading and things like that. But now with this new law, okay, maybe the premiums will come down. Yeah, is estimated 30%. 30%, I think, is just a rough guide. Okay, could be more. Okay, perhaps maybe for older people could be more. Hopefully so. I hope so. So with that, I think the beneficiary will be the older group of people.
I
Okay,
see.
in terms of premiums, okay, I think for the younger group, they may not experience the kind of savings as much because
Because
firstly,
they
because
hardly,
when you're very young, the premiums is
yeah,
quite low, right?
yeah,
So even if a 10%, 20%, 30% discount, it doesn't really feel too much. Okay, so I don't think in terms of premiums, it will affect the younger groups. Okay, but now let's talk about the payout. Okay. I think the payout, the younger group will feel the hit more because for a younger group, and then they just started working or they are still students, okay, they may not have savings. Okay. So in the event of hospitalization bills, right? The rider in the past, the rider has to cover everything. Okay, I pay a small rider, not too expensive, it cover everything. So they feel safe. Okay, but now what it means is that even if you buy a rider, you still need to pay the deductible co-insurance, the first 3,500. Okay, so for these group of people, they may feel that they need to save up more. Okay, they cannot rely on rider anymore. So I think it will affect different groups of people with different considerations.
I
Yeah.
see. Okay. So bottom line is that uh, should existing rider policy holders retain their policy or change or what? Now everybody's in a flux now, don't know what exactly to do.
Okay. I think we also not very clear. Okay, because
New plans are now.
the new plays are not out. Insurance companies are still evaluating how should they design a new outcome. But I think there are a few things that are very clear. All right. Firstly, the new riders are not out yet. Okay. Those who have the plan before the announcement is made before 26th of November. Okay, you have those plans. There's no need to make any. There's no action required from you because firstly the rider not out yet. Okay, so the thinking because the new regulation only affects the new rider. Okay, so what it potentially means is that insurance company may choose to continue giving this old rider benefits for this old cohort. Okay, so that could be one scenario. Or the insurance company after evaluating, they say, oh, maybe it's too not sustainable to keep this old one. At some point, they'll transit the existing one out to the new one. That could be possible also. The MOH is silent on this because they are not regulating this part. So insurance company have to find their own way to navigate this. So that's one thing. Okay. Um, but what is clear is that if let's say you feel that right now the premium is very high, okay, and you want to find a respite, okay, so one way is to if you have the option to downgrade your rider down, downgrade rider first. Okay, that's one way. Or secondly, to wait for a new rider to come and then you evaluate and transit over.
I see. Okay. So bottom line is that there is no rush to do anything. Just wait and see, right?
Yep.
That's basically wait and see. Yeah. So I think that's great. I go back to my original question again. For I go my original question again. Under what circumstances do you think that someone should have a rider? Okay.
Mm,
I know you talk about the cancer benefit as well, but the rider cost is very expensive. Yeah.
mm.
So who do you think should have rider plans, and who do you think should not have rider plans?
Um, I think when we think about this, there is this thinking process. Maybe I just articulate thinking process first. Okay. So first of all, where you want, first of all, if you don't know, if you are just happy with B2 and C ward, there's no need to buy IP riders. You know, doesn't bother you at all. Okay, you're happy with B2 C ward, you don't mind the wait. It's okay. There's no need to buy. There's no need to feel the pressure to buy. But if you want to have higher B1 and above private hospitals, then you really need to buy firstly the IP rider that matches the ward type. And that's very important because if you buy low and then you stay higher in that, you'll be hit. You'll hit a lot because the benefit will get discounted. Okay, so you must buy the what that you want. You don't buy low and then stay high. Okay, there's a discount effect called the proration.
I,
Okay,
I
so
don't
let's
understand. What do you mean by buy low
that
and
means that means I buy, let's say, a B1 ward. But
okay?
then in in actual case when I'm hospitalized, I go private hospitals. Okay, then the benefit is not enough.
I see.
It's not
Okay.
meant. Okay,
I
so
see.
firstly, buy the plan that matches your healthcare expectation.
Mhm.
Okay, then as you consider that, you also need to think about, okay, is this something that is within a budget? Is it affordable? The main plan first, Yeah. Is it affordable? So after you evaluate that, okay, the next thing you should consider is, should I buy a rider? Is reducing the out of pocket very important to you? The deductible co-insurance is very important to you. Okay. For some people, they say no need, I can self-insure. This part can self-insure. Okay. So how they do that? They'll just make sure that, well, I will set aside a certain amount of money to manage that. Maybe a $10,000 or so. I manage that. Okay. I save on the premiums, I self-insure this portion. Okay. But for some others, they feel that, well, I think that's too complicated. I want to reduce the out of pocket. So I buy a rider. Okay. So the rider helps to reduce out of pocket. But a full rider is very expensive. If you have currently the old rider, right, it's very expensive. All right. So if you are able to afford it, then that's fine. Okay, but you feel that you can't afford it. I want to downgrade. So now there's option to go into the new rider lah. Okay, so I think this process is very important. As we understand this process, I think that gives you a lot of clarity lah, how
Mm,
you think about.
very good. Okay. So we any last words to as a general advice for Singaporeans?
I think when we the fear of this new move is this. I think yes, on one hand, it helps to bring down the premiums, but on the other hand, I think the worries that because you need to pay the deductible, right? You need to pay deductible. People may choose to stay away from treatment. They don't want to see doctor.
I
They don't
see.
want to be treated. They don't want to do the whatever scope, whatever it is. Okay, because cannot claim, right? And because of that, it may cause more serious illnesses in the future, lah.
I
So I
see.
think with this thing, I think we just have to be very careful that we should be very proactive in managing our health. We need to see a doctor. We need to get treatment, even though it doesn't cover it. We should go for it. Okay. Then I think once that is done, I think I think that's very important. Secondly, I think it's also about having financial discipline. We should not depend on riders to cover everything. Right? And it's no longer possible. Okay, for now onwards, you should just have good financial discipline, like setting aside an emergency fund, 3 to 6 months of your income as emergency funds. Okay, this will help in your rainy days. And lastly, really think through about what is your healthcare expectations. and whether you can afford these premiums going forward. Yeah.
Oh, thanks, Eddie, for such wonderful advice. I think, everybody, if you have any interest to look for Haven for some advice, look for contact@haven.com. Okay, I don't get any commission for recommending this, right? Not even one char siu rice. Okay, yeah. So please, look for them. I think first of all, their operations are non-conflict. And I like the structure of it. Their sales and customer service do not get commission from some of this advice that they give. So I like that kind of arrangement. So now thanks, Eddie, for such a great insights. We look forward again to the next time we see you. Maybe when the new IP rider plans are out. Okay, let's take a critically look at them, shall we?
All right. Thank you, Mr. Lu. Yeah.
Okay, thank you so much. Thank you so much. Okay, thank you, Eddie. Okay,
Okay.
bye bye.
Thank you. Bye bye.